Hi, this is Andrew Zizas, your host at CFOstudio.com. We're lucky enough again today to have Mel Epstein with us. Mel participated in one of our previous interviews and had some great ideas, and so many of them that we invited him to come back again. Mel, it's great seeing you again. Thank you for being here at CFO Studio.
Thank you, Eddie. It's good to see you again. You're a glutton for punishment. Doing this again.
I love, in our last interview, you had a great analogy about the economy being compared to a scuba diver and how he should rise slowly and how the economy should rise slowly as well. I wanted to talk to you about some other issues today. We talked about corporate governance. We talked about the private equity market and the stock market. Let's start off with private equity.
Andy, let me go back a little bit because I do want to pick up on some of the items that we didn't fully cover last time. So let me just go back to that.
Please do, please do.
One of the things we were in the middle of, we were talking about the economy, we were talking about jobs, we were talking about housing. I just want to pick up on a couple of thoughts that I had on housing and jobs. And these are a little bit controversial, but let's go for it. Why not?
What the hell?
Yeah, what the hell? I think clearly jobs and housing are the big problem. I have a very different opinion on housing. I think that it's clear to me that as the government and banks have reduced mortgage rates, that hasn't sold houses. And it's very clear that it's because of an issue we discussed last time, and that is that it's not the interest rate that's the factor. It's the fact that banks aren't willing to give a loan to an employee because the employee may not have a full-time job. So I think we've got to get away from the idea of lower interest rates.
Let me interrupt you. You're talking about the concept of a temporary employee versus a permanent mortgage.
I said that last time. I said that temporary employees, which is what this economy is full of, don't take out permanent mortgages.
Yeah.
Banks don't want to loan permanent mortgages, permanent loans to temporary employees. So be that as it may. There's another issue that is equally important, and that's taxes. You know, there's a lot of talk these days about taxes. And I'm very sensitive to it, as you are. No one likes to pay a lot of taxes.
I want to pay a lot of taxes.
I doubt that. But I think that what you really want to do is know that the taxes you do pay are being properly spent.
Yes.
And I think the objection that most people have is that no one has come out and said to us, your taxes are being smartly spent. So everyone is against it. But meanwhile, we're spending a lot of money because we have to, as a government. We're incurring huge deficits. And there's a lot of talk these days, it's a very current issue, about what happens when the current tax rates expire, when the reduced tax rates expire in January. My position is that we should let it expire on people earning significant amounts of money. And the government has pegged $250,000. The number you can discuss, we can change that or not.
Higher income
I do believe
earners.
that higher income earners should go back to the previous tax rates. Here's why. We're talking about a 3%, 4%, 5% increase in taxes on those people.
Not significant.
It's not significant, and I would suggest to you that the only reason to not increase taxes is because it reduces demand, and that's bad for the economy. However, increasing taxes on people earning $500,000 or more are not going to change their spending habits.
If it's a small increase.
If it's a 4% increase, it's not going to change demand, and therefore, collecting taxes from those people will help the government without hurting the economy. That to me sounds like a good combination.
That's an interesting perspective.
I think that's the case.
There's going to be a lot of people who are going to write into us and
I
are going to be
understand
concerned
that.
about
I understand that. We can go back a little bit further and say, look, the government's job is to balance taxes. What you want is enough taxes to pay the bills, not so much taxes that you are detrimental to the growth of the economy. We used to have that. About 10 years ago, we had that situation. And in fact, we created a surplus. So what I'm talking about is a tax rate within that range. So we already know that that tax rate is not damaging to the economy. Why not go back there?
Well, given that the statistic I think I heard recently was the top 10% of taxpayers pay 50% of the government's budget
I think that's probably right. And I would suggest to you, if you did the analysis, they probably earn more than 50% of the income in the country. So there's a disproportionate share between income and taxes paid.
Well, I know we're going to have a lot of people with opinions on that one, and I intend to share them with you.
We are.
So now let me take you back to the other side of the economy, and let's talk not about the ultimate consumer and the taxpayer, but let's go back to the business side for a moment. The private equity industry is having some challenges. Where's it going?
Yeah, this is very interesting. A lot of my clients are in private equity, and I work quite a bit with private equity venture capital firms. They used to have a very clear plan. They used to know what they wanted to invest in, they had a plan to fix those companies, and they knew the exit strategy.
Right. Yeah, the idea was they went into investment with an exit in mind.
They knew the timing, and they knew a valuation amount they had in mind.
Sure.
It's all changed. The IPO market has dried up. Companies are not going public, so one of the major outlets for these firms has stopped. They still have strategic investors they can sell to, but if you only have one channel instead of two, you're limiting yourself, and therefore, they're not making the initial investment. So private equity firms, venture capital guys are thinking long and hard before they make the initial investment because the exit is not as clear.
The exit's not there. So the investment by private equity players has tabled off, I would imagine, in the recent economy.
Certainly slowed down. Now, I just read the other day that the IPO filings are at an all-time record. All-time record.
High or low?
Right now, high.
High.
Highest since the year 2000. Right now, and the question is, how many of those are actually going to be taken public? Is there a demand out there for all the shares that they want to issue? Likely not. And that probably gets into another question that I think we should discuss. Why not? Why aren't investors putting more money into stocks? I think there's been a lot of problems in the stock market recently. And we all know that investors are shying away from equities and going into bonds, fixed income. There is a lack of certainty about the controls over stock market and therefore valuations. We've got a ton of regulations, SEC rules and so on and so forth.
No, we don't have enough regulation.
We got more than enough regulations. What we don't have, though, is effective regulations.
Yeah,
I think we need fewer, better regulations. I would like to
Better
see them
and fewer.
better and fewer.
Right,
I'd love to
better
see them
and fewer.
cut down on the number of regulations. However, make sure the ones we keep are effective and enforce them.
Yeah, that's been the common concern, that there's so much regulation that just doesn't get enforced, and they regulate the regulators.
It would give,
regulate the
it would give
regulations.
significant confidence to stock market investors, which free up the IPO market, which enable private equity firms to see an exit and therefore invest, maybe even have some people get hired by companies that are growing. So freeing up regulations, I think, would be very, very important.
So it all ties back. So, if we can reduce the amount of regulation, clean up the existing regulation, better enforce the existing regulation, the stock market will likely loosen up, investors will come back, IPOs may increase in actual execution.
It all ties together.
The private equity investors
It all
will
ties
invest,
together with-
and the engine will be fueled.
With one proviso, we cannot have no regulation. I think what we did over the last couple of years is saw the effect of no regulation. We need regulation.
Yeah,
But it has to be effective, it has to be clear, it has to be enforced.
I couldn't agree more. I couldn't agree more. We're almost out of time. Let me ask you one more question. Tie back regulation to corporate governance. We talked about governance from a governmental perspective. Tie it back to corporate governance.
I think it's very closely related. I think that the corporate board of directors and government regulators too often are friends of the family. There's too many friendships in there. There's a lot of warm bodies filling seats. This also won't make a lot of friends.
Yeah.
But I think what we needed...
I hear pitchforks
I'm sure
people
they're
with
out there
torches.
sharpening their blades, I'm sure. But I think in both cases, you need people who really want to get the job done, who are serious about cleaning things up, maintaining some semblance of control and logic. It'll improve the situation. Nobody likes regulation, they'll be better off with it.
I wish I could disagree with you. I can't. I think you're spot on in all your comments. I think this has been phenomenal. I'm so glad that we invited you back for a second interview. I hope you'll come back for a third and a fourth. And I truly appreciate your ideas and your time. And this is Andrew Zizas for CFOstudio.com with Mel Epstein, Financial Executive and CFO of M&C Group. Thanks for watching. I look forward to seeing you again.